This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the world's second largest economy is having trouble convincing anyone it's under control. This coming week it'll be all about the US Fed rate decisions and the size of the rate cut. We'll get that on Thursday New Zealand time. And there'll be central bank rate decisions this week from Japan, Norway, China, the UK and Turkey. Australia will release its labour market updates. And of course New Zealand's second quarter GDP result will also come out on Thursday. But over the weekend it was mostly about China. China's industrial production rose by 4.5% in August from a year ago, falling short of market forecasts and slowing from July. This was the softest growth since March and the fourth month of a slowdown. But at least it was confirmed by the electricity production data, up 5.8%. It is rare that electricity use exceeds industrial production expansion, so perhaps that is an encouraging signal for them. But China's retail sales underperformed, rising just 2.1% from a year ago, moderating from 2.7% growth in the prior month, and missing market consensus of 2.5%. Lower car sales kept a lid on this sector amid unusual weather events this summer. And new home prices in 70 cities fell faster, down 5.3% in August after a 4.9% fall in the previous month. It was the 14th straight month of decrease and the steepest pace since May 2015, despite Beijing's extensive measures to reverse a downturn in the property sector, such as trimming mortgage rates and reducing home buying costs. Every one of those cities recorded a fall in these official stats for used houses. The largest was 13% fall in Wuhan. When resales lose money, it'll be very hard to sell new ones. So it'll be no surprise to learn that their August data shows no new loan growth, and that remains very subdued in what is extending to be an unusually difficult trading conditions. China's banks extended 900 billion yuan in new loans in August, above a 15-year low of 260 billion in July, but less than the expected bounce back. It was also the lowest value for an August month since 2015. And it won't be a surprise that August foreign direct investment was particularly weak, down more than 48% in the year to August from the same period in 2023. We've noted the trend before, but the weak Chinese economy is driving a bond rally there. Yields fell to a new record low on Thursday, and state banks have been drafted in to sell some of their long-dated bonds to try and stem the rally. But until more confidence returns to the Chinese economy generally, it is unlikely to work. If Beijing institutions don't have the firepower to move this market, it's unlikely the core SOE banks do either. In a rare statement, with the loan growth data release, the central bank indicated that new stimulus is on the way to shore up their economy. Late last week, President Xi exhorted his government to ensure the 5% growth target is reached this year. Xi's intervention came after widespread voices warned that the 5% target was probably out of reach now. Coming at a time that isn't convenient for their economy, China is going into an end-of-summer period of public holidays. First, there is the upcoming Mid-Autumn Festival from September 15th to the 17th, a total of 3 days off, but where Saturday, September the 14th has been declared a workday. That'll be followed by the 7-day National Day holiday from October the 1st to the 7th, but that is being offset by making it a full workday on September the 29th, which is a Sunday, and October the 12th, which is a Saturday. One consequence of all this time off is that foreign travel is expected to boom. Visa-free policies and lower airfares are seeing the number of Chinese holiday bookings abroad surge. In India, officials there are chafing over creditor moves in the US to put Bijou's into bankruptcy. Indian officials have arbitrarily removed the creditors who petitioned the US court that ruled on the bankruptcy from the creditor process in India. It might get quite messy there. In Europe, July industrial production was flat from June, in the EU, but lower in the wider euro area. From a year ago, the declines are 2.2% and 1.7% respectively. In Russia, their central bank increased its policy rate by 100 basis points to 19% in a move markets did not expect. They are battling high inflation in a war economy that is distorting faster than their central bank is comfortable with. And in the US, the University of Michigan Consumer Sentiment Survey increased for a second month in September to its highest level since May. This was above what was expected. Both current conditions and expectations improved, topping estimates. Meanwhile, inflation expectations for the year ahead declined to 2.7%, but those for the 5-year rose marginally to 3.1%. You will recall that the Bank of Canada cut its policy rate 2 weeks ago by 25 basis points to 4.25%, but now the talk there is of much larger cuts at their next meeting on October the 24th, maybe 50 basis points or more. And in Australia, the trend well established here is showing up there. Sharply more listings, lower auction clearance rates and falling prices. Now observers are saying that it's turned into a buyer's market there, especially in the eastern states. And the US Treasury 10-year yield is now just on 3.66% and unchanged from Saturday. And the price of gold will start today at $2,578 an ounce and down $4 from its Saturday new all-time high. And oil prices are softer by 50 US cents at $68.50 a barrel in the US, while the international Brent price is now just over $71.50 a barrel. And the Kiwi dollar starts today at 61.6 US cents and unchanged from Saturday. Against the Aussie, we've dipped slightly to 91.8 Australian cents. Against the euro, we're unchanged to 55.6 euro cents. That all means our trade-weighted index starts today at 69.3 and unchanged from Saturday. And the Bitcoin price starts today at $59,791 and virtually unchanged from this time Saturday too. Volatility over the past 24 hours has been low, at just on plus or minus 0.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.